Come on in. Hey. Come on in. I'm getting set up on the other platforms here. So come on in. Bob your head a little bit. Let me know where you're checking in from and share this live. I'm sure someone could use this information. Don't be selfish. Don't be stingy. Come on in, share this live out. We're going to be talking about charitable contributions tonight from a business as well as individual perspective. So come on in, share this live. Hey, Candace. Come on in. All right. So I got stuff set up a little bit different in here. And as you can probably see, I covered the whiteboard just so people won't see other people's information. I'm trying to get shared. I'm sharing, so follow suit. Again, come on in, bob your head a little bit. Let me know where you're checking in from. Listen, mind your business now. See, now why you won't go ahead? Come on here when we got company. I'll talk to you after this. Enjoy the backdrop. Come on in. How is everyone this after 4th of July weekend? We had a long weekend. Those of you who were off either Friday or on Monday, come on in. Welcome. For those of you who are new to me, I am Tawana with Bryant Business Solutions, a 100% virtual tax and accounting firm. We have now, you see how she over there playing? We'll talk about that later. But Lord, she just threw me off. Y'all throwing me off over there on IG. IG over there playing. But it's a 100% virtual tax and accounting firm, and we're soon to be adding. Well, I'm saying adding, but we're not really adding because I'm opening it up as a separate business. Credit repair, business credit structuring, as well as capital consulting. So we'll be the ones set up to fund the loans. And I'm looking to kind of play this out over the next year to 3 years for it to be fully in place. As we know, I don't like to do stuff. I like to give you information. However, until I become well-versed, I give you what I know, what I understand, but I continue to learn until I've gotten it under my belt, and I continue to learn and I continue to grow in that area so that I can become an expert. We know we should not ever rely on one source of income. And that even means if you're an entrepreneur, don't put all your eggs in one basket. Don't put everything in one area and then you don't have anything to fall back on. We all know the people at the 9 to 5 may get on your nerves or whatever, but until you get yourself set up in your foundation, straight, hold it there, use their money, as much of the time as you can. I will say, before I left corporate America this final time, I kept getting wooed back in, okay? But before I left corporate America this final time, one thing I would do is we were allowed to listen to headphones. So I would have trainings in my headphones, just kind of refreshing and getting back on top of things that I was doing part-time so that I could be prepared to do it full-time. It wasn't information that I didn't know. However, I wanted to make sure that I had my ducks in a row before I put my notice in at that final employer. But what I want to talk about tonight is charitable contributions, and whether it makes sense for you to do it either as an individual or as a business. And then also to share with you some nuances and some things about charitable contributions that you may not realize. Okay. One, of course, we know now lately here, I've been talking a lot heavily about tax planning. And the reason I'm talking about tax planning, because I see during tax time, so many things that had strategies been put in place, the tax liability would not have been that high. And not just the bottom line tax liability of what you're paying at tax time, but what you paid throughout the year would not have been so high had you been implementing a viable tax strategy to your business. One of the things that we look at as charitable I don't know about any other accountant, but one of the things that I look at is charitable contributions. And with charitable contributions, we just automatically assume that when we pay our tithes and offering, when we give to a 501(c) organization, when we give clothes, bikes, furniture, cars, we just assume that we're going to be able to write that off, right? Okay. So one thing that I think gets missed is, unless you are itemizing on your personal tax return, that deduction is 9 times out of 10 not valid. 9 times out of 10, you're not going to be able to use that contribution. Why? You're not going to be able to use that because your itemized deductions have to exceed the standard deduction in that year. Hey, son, have to exceed the standard deduction in that tax year. So if you gave $5,000 worth of stuff in 2020, you go to do your 2020 tax return this year, 2021, you go to complete your tax return, then you find out, dog, it's not going to allow me to really get any benefit of the charitable contribution. However, the CARES Act allowed, if you gave cash donations, for $300 of that to be used in what's called an above the line deduction. What does that mean? That means it comes out before your total taxable income is determined. So they are going to reduce what you earned and other things that may be there above that line, and they're going to allow you to reduce it by $300. Now, one thing that I wanted to share, as a result of the most recent stimulus package, the 2021 above the line deduction is going to be $600. Hint, 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 hint. So if cash contributions can be written off up to $300 this year, and they're going to reduce your tax liability up to $300 this year, next year is $600. What do? You give $600 so you can get that credit or above. You know, of course, tithes is 10% of your income, but you give or a more plus offering, but you give and you go ahead and do it accordingly. You make it make sense. Okay. So the $300 above the line deduction is there for those people who do not itemize. If you itemize, then you can take your whole entire, whatever the donations were. So you have to exceed the standard deduction. Right now, the standard deduction is about $12,000, just a little bit more, 12,400 or 700, something like that, right now. So when you have the standard deduction, your expenses or your Schedule A items, which are medical, taxes, property taxes, your charitable contributions, things of that nature, have to exceed that 12,000 plus in order for you to even be able to carry it. Otherwise, it's lost. So one of the things and one of the strategies when you're looking to give donations that's recommended is for you to, one, you don't know what the standard deduction is really going to be, but you can consult with your tax professional. We get that information ahead of time a lot of times. So we'll look at what the charitable contribution is going to be. What the standard deduction, I'm sorry, what the standard deduction is going to be. You have to exceed that amount. So say you have things that you want to give, however, you know you're not going to get the benefit of it in that year. Wait, hold off on it, hold on to it, give it in another year. Like, let it kind of pile up, the value of it pile up, or even the cost. So if you wanted to give, and I'm not saying this to take anything away from any 501(c) organization, they need it. However, if you want to be strategic in how you handle it in regards to your taxes, then hold on to that. And instead of giving $5,000 this year, save that $5,000 over 3 years, give $15,000, where you know you can now take advantage of the benefit of reducing your tax liability. Does this make sense to anybody? Or am I over your heads? If so, let me know, because I can break it down some more. But I want to make sure that I don't come on to ever give game or free game or whatever you want to call it, drop nuggets, gems, pearls, however you want to call it. I don't ever come on and want to be so above your head that you don't have understanding. The goal is for you to understand and then apply it. All right. Well, I don't have anything from the gallery, so I'm going to continue on. So what you want to do now, what you want to do is make sure that you give it in a year that you will be able to most benefit from it. Which, like I said, if it means you holding off 3, 4, 5 years, because if you give it now, all you did was give it. You're not getting a benefit from it. So what's the purpose of giving it? And the only thing that I personally would speak different to is your tithes and offering. But any organizations, hey Jazz, any organizations, my suggestion is wait 3, however many years for it to add, for your contributions to add up to or to exceed what your standard deduction is going to be, so that you can actually benefit from its use or from you using it. Now, something that a lot of people don't know, and this kind of, I got a little educated on it as well. When we're talking about small businesses, we forget that as a small business owner, the only really business that really qualifies for the business expense of charitable contributions is a C Corp. They're the only ones that can deduct cash charitable contributions as a business expense. So know this going in, business owners. Don't assume we got all the answers. Some things you may have to get some more information on before you go doing it. Now, if you are an organization, caveat, if you are an organization that have, come on in, share the live. But if you're an organization that has also a 501(c) arm, it does not mean that you can't give to that 501(c) and write it off. So we have to be strategic and in how we save. And all these savings do not come by way of write off expenses. You know, some of the credits make more sense. And this leads me to this. I'm working with a client now, and one thing that's, I think, gets missed or misunderstood, and I know this is kind of taking a different direction, but one thing that I noticed gets misunderstood is the type of taxation that you have being applied. Just because you had, hey, Ari, I'll call you after this, baby. If you have income and it's self-employment income, let's say, or you have income that's carried over from your K1S or K1P, shareholder or partnership, if you have income, well, let me back that up. Not the K1s, just the Schedule C. Let's talk just in Schedule C right now. So in the Schedule C, Your self-employment tax is not your federal income tax. There are two different taxes. So if you earned or if you had a loss in your business in XYZ year prior to what you're doing now, it is possible that you have no tax liability because you experienced a loss. But if you made six figures now in your business, you're going to be responsible for your self-employment tax on that. However, the qualified business income deduction allows you to now deduct, they give you a percentage if depending on the type of business. Certain businesses, I know my business, it applies. Certain business owners can take or can receive a QBI deduction, a qualified business income deduction that allows you to now reduce your taxable income by a certain percentage or a certain amount. Okay. That reduces your federal tax liability, but not your self-employment tax liability. You are still responsible for that self-employment tax, which may now increase. So don't be of the mindset that, oh, I made about the same amount of money that I made last year, but the income source is totally different. You have to pay attention when we're educating you. I hope my tax professionals are educating you. For those who are accountants, bookkeepers, if you do not have tax experience, I'm dropping my course, Batter Up, so that you can sign up. Go ahead. I'm only accepting a very limited amount of people, probably up to maybe 5 to 10 people, because what I want to do is use this as to launch, just to make sure I get everything fine-tuned in it. Like I said before, I was kind of kicked off the ledge from some people that I've been helping over the years, and they're like, Tawana, you have got to, as we're going through real life scenarios, share this knowledge, because it's stuff that you're not going to think about, that I'm going to think about, because I've been doing this for so long. But like I said, every experience is a new experience. As a tax or accounting professional, you may have one client that has this situation that now you can learn from, versus another client that may not have the situation. But one thing that I do see, especially as people are starting to transition out of corporate America, is now you have that full liability if you're not an S corporation and being taxed via your W-2 now. Because remember, if you elect to be taxed as an S corp, you have two responsibilities: get on payroll, pay yourself a reasonable salary. Your status can be revoked if you're not doing those two. Sleep on it if you may. I've seen it happen. And just because something else, just with something that's going on right now, we can't always assume because the government or the governing authorities have not said anything, it makes it okay. One of the things that I've been learning over the past few years, just really, God's been dealing with me just with a lot of stuff. And one of the things that I've learned over the years, and my family will tell you, my favorite line was, well, Big Mama did it. And if Big Mama did it, I could do it. And if Big Mama did it, and in those areas that Big Mama excelled and succeeded, great. But those areas that weren't quite right in those traits that we pick up, that doesn't make Big Mama right. And I'm finally at, I won't say my age, but at the age that I am, I'm finally getting to a place where I can say Big Mama wasn't always right. As much as and everybody knows in my family, all 28 of my first cousins know I was Big Mama's favorite, number one. Let's say that. Just kidding. Because, some people get offended by that. But they know how I was about Big Mama, or how I still am about Big Mama. But one thing I've come to accept, that Big Mama was not always right. And the other thing is, as we're learning from people, they may not always be right. Now, I see where some people will find out that they're wrong and they have no reason to go back and rectify it with their clients. I just tend to not do that. My clients will tell you, I could think of two right now off the top of my head, will tell you, I have come back even years later. They have been my client and I'll come back and say, hey, I made a mistake here. I found the mistake. I made the mistake. Let me make it right. And I let them do with it what they make. But my responsibility is to be ethical first and to be honest and integral. And so I'm going to come back to my clients and say, hey, look, this wasn't right here. Let me go back, even if it means that I have to spend some extra time amending for free, because now I've learned something else, because I'm not the end all, know all, be all. I know a lot, but I don't know everything. And if someone teaches me something and I can see it in black and white, then I'm going to now apply it. But it doesn't mean that I don't go back and look at those people who I know their stuff. Oh, wait a minute. They did have this situation. Let me go back and fix this. I'm big on that. I'm very big on that. So I say that to say, know or understand your taxation, what you're actually being taxed on, what that charitable contribution, where it applies, how it applies, whether or not you're going to even receive that benefit. As tax professionals, accounting professionals, we have a responsibility to let our clients know when, right, we let our clients know, when they're not going to get the benefit of a deduction or of something that they're thinking that they're going to get a benefit of. I try to let my clients know on the front end whether or not they're going to benefit from something, or if they don't, and here's why. Because knowledge is they say knowledge is power. But the thing is, you got to take notes. I've said this before, either take notes, write it down, even if you don't remember it, because I have situations where I know I've explained something to a client more than one time. They don't pay me any attention until the situation is not the same. And now you're like, well, I didn't know that. No, you knew, because I told you. It's a matter of whether you heard me, or you listened to hear, or you felt like the information didn't apply to you. So let me just block it out for right now, and I'll pay attention to what I think applies to me. No, all of it applies. I'm not going to tell you if it doesn't apply, even if it's going to benefit you in the future. So remember that this year, for 2020 tax return, this year it's a $300 above the line deduction for cash contributions. Okay. And then next year is going to be $600. But if you know that your charitable contributions, donations, whatever you're giving is not going to add up to the amount that's going to exceed the standard deduction so that you can itemize, then you make a decision to give it, but know that you're not going to get a benefit from it. Okay. I want that to be completely clear, that you are not going to get a benefit from that. Now, in 2021, corporations are going to be able to continue to deduct charitable gifts up to 25%. Hey, Vanessa. And then the CARES Act regarding the minimum retirement amounts doesn't look like it's going to be extended. But these are the things, though, as tax and accounting professionals that we look at. These are the things that we like. That's not like if you're a, what's the word? Artistic. If you're a creative, that's what they're called. If you are a creative, you want to create. You ain't got time to be keeping up with these tax laws or these tax things to see what's happening or what's going on and what's changed. That's our job. That's our job. Let that be our job. Let us do it. Let us help you. That's what it's here for. When you invest, and there's a difference between an investment and a cost. When you invest in professional services, It's a tax write-off if you are a business owner. It is a tax deduction. So why not? Especially, I think a lot of times we don't look at the big picture. We don't look at how much having this professional will make me in the future or save me. Because like I said, I see a lot of missed opportunities with my clients. I may mention them, but that's honestly, when you pay for tax preparation, you are paying for us to prepare after the fact items, things that you did in the prior year. Tax planning allows us to now forecast and look into the future and say, and make great estimations of this, because this is the history of what's happening. This is what's bound to happen unless you know you have some changes coming. We put all that in and assess that. We look at that. We look at what we can do to help you to pay the least amount in taxes possible legally. And I don't mean doing no tricky loopholes that's going to come back to bite you later. I mean legally really applying it, and how aggressive we get is based on what you want to do, how aggressive you want to be. I'm really, like I said, I'm really starting to transition heavily to tax planning and not so much tax preparation, just because. And so I want my tax prep team in place, of course, still be there for them, right? Legally. Okay. I want my prep team to be in place, but I want to focus more on tax planning because we need to be able to forecast out and strategically apply those strategies so you can save overall. We think because, I got a big refund, or, I didn't have to pay the IRS at the end of the year. You ain't looking at what you put in during the year, especially if you're still on W-2 income. Oh, whoa. Wait a minute. I got a request. I'm about to. Yes. Even though she was not on the roster for today, she think this gonna get her out of her our scheduled. Did you? Hey, this does not exempt you from going live later. So let me bring up y'all, just so y'all could get some more golden nuggets. I call this the what was my name I gave you? Y'all, this is a trucking beast in accounting. You hear me? Like our trucking beast. We're going to have a scheduled live at a later date, but this is the money architect, Ms. Vanessa Gant, and this is my accountability partner. So when y'all hear me talking about my accountability partner, this is one of my accountability partners that we talk daily for the most part, multiple times a day. So what you got? What you want to talk about?
I don't know. I just wanted to chime in real quick, and I'm sorry for my background as well because I'm traveling this week. But I just wanted to tap in when you were talking about, the investment that business owners and entrepreneurs make into their businesses when they hire accountants and tax professionals. I get it. The entire year, like you're making money, you're growing your business, and sometimes the tax portion or the tax savings portion, or even the accounting portion, is usually the last thing that they think about because they're so focused on actually running their businesses or, generating profits or funds in their business that sometimes that back end stuff gets missed. And it's such a very, very, very crucial part of it. Waiting until the end of the year to invest in accounting and bookkeeping services. You could seriously be doing your business a disservice because then you're missing out on the opportunities to be able to implement some tax strategies, put some things in place to help you reduce your tax liability, even making sure that you're able to claim all the expenses in your business. Last minute means you're going to pay, top dollar, right? Because you're not giving yourself enough time to put things into place.
So I know, with this, you use adding tax services now. You're now able to see it from both ends of the spectrum, from an accounting perspective. Again, y'all, this is the trucking beast. You hear me? When I say multi-million-dollar maker. So if you are in trucking, looking to get into trucking, tap in. When I tell y'all I don't know everything about everything, but I will plug you in. This is my trucking plug. But when you look at it now, not only from an accounting perspective, but from a tax perspective, do you see where there's so many missed opportunities that
Absolutely. Before I add, if it's in corporate, my whole thing was, the accountant, the CFO, just running the companies. And then when I started to branch out on my own, I started adding tax services as a part of my business. And there is just so much that is missing, even for me, because, we talk about this all the time. There are accountants that don't prepare taxes, and there are tax preparers that don't do accounting. So when you find someone that is actually well versed in both, it's actually a benefit to your business. And, a lot of the side, when coming from the accountant side, not the tax preparer, like a lot of people just focus on making the money, not necessarily saving the money, not necessarily finding ways to pay the least amount in taxes or making sure that they are right, they're able to write about their expenses. They are really focused on the money. A lot of people don't get focused on the write-offs until it's November and December, and it's usually too late.
Right.
Well, not too late not too late to claim the expenses, but now you got to go back and you got 10, 11 months that you have to go back and backtrack all of these expenses because you weren't organized, you didn't properly plan. And again, I'm going to keep holding on to this. Like you're not giving yourself enough time to put tax strategies into place. Even if it was, I saw that the title was, the charitable contributions. Even if it was that. What if you needed to make, a big charitable contribution to help you reduce your tax liability, but it's December 15th.
Yep.
You may not be able to shake and move that around in 15 days to do that before the end of the year.
Right. Well, and that's the thing with the charitable contributions. A lot of times people, I hear this all the time. Oh, what can I write off? That's the first thing that's always asked versus asking.
IRS was ordinary and necessary.
Right.
Business,
Right. But they don't look at, you're worrying about what can you write off? Where can you shift some of this income with viable tax planning? Where can you shift some of this income now that you're not responsible for the taxation of it? Where can you move it to? Where can you put it that it won't be taxed? And a lot of times I see that happen so often, or people assume, and I'm going to say this again, people assume that tax preparation and tax planning are one and the same. They're not. CFO services is something different. When you're looking to budget and forecast and do all these other things as a CEO, then you need to be paying for a different type of service. And
go ahead. I want to add this, tax planning is not something you do at the end of the year.
Right.
Tax planning is what you do throughout the year.
Right.
Now you can prepare for your taxes at the end of the year, but you can't tax plan. Well, I'm not going to say you can't, but you got a 95% chance of being or failing of trying to tax in December or even November. So a lot of the time people.
Your sound went out.
Businesses who may not require. Yeah, I had a call coming in.
Okay.
I put it out. There's some people who are operating their businesses and they may not require monthly accounting services. Maybe they need quarterly accounting services. But I tell everybody, I don't care what you're doing in your business. Come October, you got to check in with somebody because now you got 90 days to implement some things. Now you got 90 days to put some things in place. So I get it. You're focused on growing the business. You're focused on making the money. And I was like, man, I got to put somebody in to help me with the taxes. You're going to fumble. You're going to fumble and fail if you decide to do this stuff in December. Even if you decide to do it in November, it's just not going to work. No, it's not going to work.
Right.
I will tell you, I will leave this here. So I started working with a client, I believe it was maybe last year in November. And they were really big on S-Corps, right? It's like, okay, why don't get S-Corp? Because that's the thing now.
Right.
Become an S-Corp and reduce your taxes. I'm like, but they're not telling you the whole story. Right? They're not telling you the whole story. So we actually walked through it, right? We walked through everything, and we literally just did a review on Friday. In the first 6 months of the year, they were able to gross $689,000 in their trucking business and still have a six-figure net profit after putting themselves on W-2 payroll and all of their drivers on W-2 payroll. So it's like everything across the board, like doing it right.
That's the gem. That's the gem right there. Doing it right. We want to cut corners so often. And one, like I just told a client, it's harder to keep up with fraud. That's what I'm gonna call it. It's harder to keep up with fraud than it is with the truth. And you know, our parents tell us that all the time. Like, if you lie, you got to now keep up with that lie to remember what the lie was that you told. And what do? Do you write it down to track it? Like, how do you keep up with this lie versus the truth?
The numbers tell
and you have to do it right from the beginning. You can't cut those corners because it's going to make it harder to come back from one. But the other side of that is when you start doing it right, and the penalties that you may incur as a result of now, 3, 4, 5 years down the line, you want to get it in order. You know, like, you really need to, out the gate, do it the right way. I always talk about a proper foundation. You don't build a house on sand. You do not. And you make sure you dig deep enough so that if that foundation is strong, so that if something happens, you can come back from it without, because the penalties and interest is we sleep on that, or people feel like, oh, well, so-and-so got out of it, or we can't look at so-and-so. We can only look at you. Each person's taxes and accounting is different. Stop going to people saying, oh, everybody is an S Corp. I want to be an S Corp. An S Corp might not be beneficial for your business.
And there's nothing before I drop off. I want to say this. I really want to say this. Like, there are 2 ways not to pay taxes. Y'all ready? Like, for real, 2 ways not to pay taxes. Plan for it and not to make a profit. And I don't know nobody that's in business not to make a profit. So, I mean, you having to pay taxes or showing that profit on your schedule, it meant that your business did well. Are you starting your business? Are you really starting your business just to say you got a business? No, you want to make money. And making money sometimes means that you're going to pay taxes. Sometimes it means that you have to plan to pay the least amount of taxes possible. But the end goal, I get it. Everybody's end goal is, oh, I don't want to pay taxes. I don't want to pay taxes. Well, do you want to make money in your business, or do you want to profit? Or do you just want to break even? You want to invest all that time just to break even. Come on, y'all. I need that snap out. Like, plan for it. That's the best way to do it. Plan for it. Because I need everybody out here to be making money in their business. Nobody's out here wanting to be in business, dedicating all their hard sweat, tears, earn money, and all this good stuff, just to be like, I don't have to pay taxes. But then you want to buy a house, and
that's the one.
Negative everything. Come on.
Right.
We as a whole got to do better. Like, be in business, be proud of being in business, follow the rules, invest. It's not cost. You got to change that mindset. Invest in the proper accounting. Invest in the proper tax planning when it's that time for your business. Ask questions. Like, don't rely on that professional that you hired to give you everything, to tell you everything. Ask questions. Be involved about your business.
Right. And that's the other side of it. Be involved. There's so many people, and I get it. Like I said, there's creatives out there that really want to just say, oh, let me just give everything to you. No, I need to talk to you. And that's why I put the mandatory document review in place this year. We're going to talk about this because I found that so often my clients, they're like, oh, I know you're not going to cheat me. I know I'm not going to cheat you either. I know that I'm going to be honest. I know that I'm going to be integral. However, you still need to understand what's happening. A lot of people do not realize that the IRS, if they audit you, they're auditing you, not your accountant, not your tax preparer, not your CPA, whoever you have doing your taxes. They are not being audited. Unless our company is audited, we're not going to be audited. And you have to be able to be ready when that audit comes. I always tell my clients, we're going to stay ready so we don't have to get ready. But the other thing is, I don't want you walking around in fear. You will not be fearful of the IRS. There's nothing to be afraid of. We got it together. We're going to do it right from the beginning. And that's that. We got to really be accountable for us in our business. And so often everybody wants to cut corners. We cannot keep cutting corners because, again, now it becomes a lie that you have to keep up with. Why? When we could just handle the truth. Black and white is black and white. Like you said, the numbers don't lie.
Numbers don't lie. And for you, especially like your service group of being creatives, let's just call it spade to spade. Your expenses are only going to be split so high. Like they're only going to be, I mean, you're going to have subscriptions. You're going to have maybe some delegated work to maybe like a graphic artist or social media, some, you know, a virtual assistant. I mean, but you're not really buying a lot of equipment every single year. Like you're going to turn a profit in your business. A creative outside of their first year probably is going to automatically have a profit in their business. Just go ahead and be ready for it.
Right. And then that's with the exception of a few that I have, because I do have some that, because of what they do, they have higher end items that they purchase. But it's still, like you said, it's still but so much. It's not like you're in trucking and you're paying for these high cost truck repairs or tires at $1,000 a pop, or, you know, you're not paying for all of that stuff. And especially if you're home based, your overhead really ain't that high. If you really think about it, your overhead is not high. So what are you going to do? Where are you going to pull it from? Out of the air? And I don't falsify no documents.
I mean, that's even like us in our businesses, you know, to a certain degree, we can probably be in relation to creatives, because, you know, we provide a service that doesn't require a lot of equipment. Right. So, you know, we have to bite the bullet. Right. It is what it is. You know, you just have to prepare for it. So I didn't mean to hijack your. No.
You know, like I said, we'll have a scheduled day later, because I have some specific questions that I want to ask you. You know, adding taxes to your business, to your accounting business. But this is good. This is the information that's needed, and this is what people. And I'm sorry, YouTube and Facebook, if you want to join us, we're over at The Transparent Accountant on my IG. We're Miss Vanessa Gant. I am the Money Architect. We are tag teaming it with these gems, but it's the truth. You know, it's the truth. So you can come on over and join us over there. If I try to have it close to the computer so that you can hear. But I appreciate you coming on and really adding value to what it is that the discussion is, and us really helping the masses. Because, you know, I tell you this all the time. How do we reach people? How do we reach people with the truth in a society where social media has taken over, and whoever is the most popular wins, not who's giving you the truth wins, you know?
Popularity doesn't run the race for me. It's honesty, integrity, and accuracy. That's what we're rolling with over here. If you want that, we got you. Right.
Like I said, I'm a little too cute to do Fed time. I'm not doing Fed time with nobody or for nobody. But it makes it really, really challenging because, like I said, we see things, and just because, again, and I'm going to say this again, and as I always do, just because people have acronyms behind their name, now don't get me wrong, it doesn't make them any less qualified if they focus on taxation or if they work in taxation. However, if someone, just because they have these certain credentials, it does not mean they're qualified to give you this information. Just because they did it for themselves does not necessarily mean that they're qualified to give you this information or to help you in your business. So,
okay, so I promise you, I'm going to say this one topic that you just said. So, at my last job, my last boss, he's a CPA, complete CPA. He didn't do taxes. He could not help do the corporate taxes for the business that we were working for. But I was able to assist with the prep for it to go to our outsourced CPA. So that's the thing, you know. I mean, it's not even discrediting that, because like those people who do have their CPA, I mean, they definitely, that test is no joke, no whatsoever.
Right.
Okay, Mr. Country, send me a message. But like, it's not like everybody, just because someone says they're accountant, just because someone says they're a tax preparer, they say they're EA or that they're a CPA, doesn't mean that they do everything. Like for me, wholeheartedly, you know for a fact that I don't want nothing to do with nothing that's e-commerce, nothing at all.
Well, listen, me and you too. I mean, I have a e-commerce person on my team, but I ain't touching it.
Yeah, because me doing doing, you won't catch me doing e-commerce taxes. You won't catch me doing e-commerce bookkeeping. I kind of stay in my lane. I specialize what I'm in, and that's the thing. Like I am the expert when it comes to trucking, accounting, and taxes. I'm not the expert when it comes to creatives. I'm not the expert when it comes to real estate. So the thing is, like, just assuming that everyone is well rounded. It's not like if you're looking for someone to get the best bang for your buck in your business, you know, look for someone that specializes in what you do, or someone that is able to, to be versatile.
Right.
So that you can be put in the best position ever.
Well, and I encourage people all the time, interview these people. Like, even if it's me, ask questions. Don't assume that I'm able, and I'll tell people in a minute. I had a strategy session last week, I think it was, and she was telling me that she has a CPA, yada, yada, yada. And I was like, one of the first things I said is, let me clear the air right now. I am not a CPA. I am not a CPA by choice. Not that I can't sit for the exam, but that's not the direction I'm even looking to go for my business. Never have been. My direction, honestly, was college level accounting and teaching collegiate level accounting. So I went on to get my doctorate. Whole nother story. I was over it. By the time I got accepted by chair number 2 and was ready to do my defense, I was over it. And I saw another avenue where I can still share my expertise with the masses. I don't have to work for anyone, because I tell y'all all the time, I'm unemployable. Like, I'm unemployable. I am not the person that goes along to get along. I am not going to do things because it's politically correct. I am going to be honest and truthful. And a lot of times I find in corporate America that we're asked for these truths, but when we give the truth, there's a problem. There's an issue. And so I realized then I'm wasting a lot of money. I'm wasting a lot of time when I could be getting this information out here now in a whole nother platform. Now, I do desire my EA just because I want to be able to, at that taxation, and be able to fend that on another level, and being able to do it for my clients more than I'm able to now. I have limited powers to do that based on the authorizations that we can get. So we can do some tax resolution, but it's still limitations. Yeah.
We built a network.
Right. And but that's the other side of it. Tap into someone who has it. So I try to build strong relationships as well, so that if my clients need something that I'm not able to facilitate, I've already partnered with someone that I can say, hey, tag team, tag you in, as do I and Vanessa. If it's something in trucking, tag you in, and we build that relationship here in business. But one thing that we don't want to see you do is suffer or pay more in taxes. That's in the Taxpayer Bill of Rights, that you should not be paying more in taxes than you are responsible for. But you don't know what you're responsible for because, you're not keeping up with whatever, or you're not planning to avoid these taxes legally. And tax avoidance is absolutely legal. Tax evasion is not. So don't mess around and go to jail.
There's a difference.
Yeah.
That's it. So I have to hop off. Thank you for letting me jump in and share with your child.
Y'all tell Nessa, thank you for hopping on. Thank you so much for hopping on, and we will plan for a later date. We'll talk later though, I'm sure. All right, bye-bye. All right, guys. So you heard it there. So I'm not the only one singing the song. I'm not the only one drinking the juice, but really being able to take responsibility for our businesses as a whole, to understand exactly what's happening. Like I said, with charitable contributions, make sure it makes sense. If it's an organization, for example, for me, the Autism Society is very near and dear to me. I don't care if I get credit for it or not. I'm going to give. But make sure that you are paying attention, especially when you're meeting monthly with your tax professional or your accounting professional. Make sure that you are paying attention when they're talking to you. Don't write it off as, oh, I don't know this and I just won't know this. Get the information, absorb it, No, we don't expect you to know everything about everything. We don't expect you to know the tax or accounting lingo, but we want you to be aware, be alert, be empowered to handle your business accordingly. All right, guys. So that actually I've run this long before, but just by myself. So again, thankful for Vanessa tapping in. Again, we will be doing a session later on, as well as myself with the accounting chick. If you don't know her, go on IG and check her out. The accounting chick, she's my other accountability partner. So, and we're going to try to do it together as three. Hopefully we're able to do that, and be able to drop some more nuggets and gems. Again, next Tuesday, guys, is my birthday. So I don't know if I'm going to be on or not. If I come on, it will be, I'm just chilling. But I don't know if I'm going to be on or not. So if you don't see me, you'll get a notification that I'm not on, because it's my birthday and I may have gone out and done something. I'm already starting to take advantage of my birthday freebies. So if you're not signed up for birthday freebies, y'all, with these companies, go pull up the list and sign up now, especially if your birthday is far off. Go ahead and sign up and get some free stuff and enjoy it on the house. All right. So I hope you all have an amazing rest of your Tuesday, and I will see you guys later. Have a great evening.